Okay.
Are we live?
No. Oh, yes, we are live. I was like, something's wrong. I'm getting an error message. I think we're live. I hate that. I hate when I can never tell if we're live or not. Hello, Amber. Welcome back. And hello to everybody who's going to be tuning in with us here shortly. I am here with my amazing friend, Amber Coleman from Guild Mortgage, one of the top 200 lenders in all the nation, the biggest, brightest star in my life, the one with the reddest hair. Hello, Amber. How you doing, babe?
Hello, how are you doing, beautiful?
Good, good, good. I'm excited to get on and talk today because we are actually today going to be focusing mostly on zero money down programs and some really cool opportunities that you informed me of that are really giving people a chance to kind of come on and take advantage of free money or zero money down programming that allows them to get into a house with little or no resistance, if at all possible. So super stoked to talk about that today. But while we're letting people get on and join us live, I want to just say thank you to all of you who do tune in to us. This was a last minute addition to our schedule today. We weren't able to go live yesterday. We do try to do Wednesday lives for you on a consistent basis, but sometimes life gets in the way, like our sons. Amber and I have two beautiful, gorgeous, amazing blonde-haired, blue-eyed, I think your son has blue eyes,
He does
sons.
have blue eyes.
And their birthday was yesterday. Both of them share a birthday. So happy
It's
birthday
crazy
to
that they
Jordan.
share a birthday.
That's so funny. Happy birthday, Jordan.
Oh, happy birthday, Phoenix.
All right. So as we come on live, of course, forgive us, but family calls and we did the family thing yesterday. But today we're going to give you a quick update on what's going on with the market. We're going to have a little discussion about that, but do not click off if you can stay. We've got some zero money down programs that are really awesome that are giving people a chance to get into a home with no money out of pocket or no money down payment. And I think they're really inspiring and they're just honestly creating hope that, that's our goal every day is to create hope. So Amber, are you ready?
I'm ready. Let's do it.
Okay, so for those of you who are joining live, make sure you drop it like it's hot. We always do Q&A at the end, and these are for you. So make sure you put your questions in the comment box below. We will absolutely answer your questions as soon as we get done with our chat. So Amber, before we get started, before we start talking about the money programs, talk to me about what's going on with the market in general on your side of things.
Well, on my side of things, I'm always looking at the rates, right? So
Yes.
every time we get close to that Fed meeting, we always seem to talk about that Fed meeting.
Oh,
This
yeah.
this week it's on May 3rd. So
Yes.
as we get closer to that, there's anticipation in the market. And anytime there's anticipation and people guessing, the market usually gets a little bit worse. So as
Yes.
far as rates go, this week the rates have gotten a little bit worse.
Okay.
Um,
I
yeah.
appreciate your honesty about that. I know that there's going to be some naysayers that come on here and that all, the rates are horrible. Don't buy a house, blah, 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 blah. But that's not what we're here to talk about because rates aren't always the thing that we need to focus on. Rates are one part of the component, right?
Well, and you watch the rates and they're up and they're down. So, you
Yeah.
just, like usually like this type of week, you just watch I mean, that's what we do every week. We come on here and we talk about what's happening in the market. One week we'll say they're down, the next week that they're up, like there's
Right.
no rhyme or reason to it, but
Right.
they're continuously flowing with inflation. Inflation's
Got
what
it.
causes them to flow. And that's what's causing the Fed to make moves.
I like how I said the rates are one part of the component. I meant they are one component of the entire picture is what I meant. And you're right. They do ebb and flow, go up and down every single day. For those, the faint of heart, it's not an easy thing to follow or an easy industry to be in. So I'm super grateful that you have a strong heart and that we are so lucky and fortunate to have your time and energy. Again, top 200 in the nation. Let's just say that out loud again. My sweet Amber Coleman, she's bringing the heat with her knowledge. On my side of the market, we are definitely, even with the market up and down on the rate side, are definitely seeing a shift when it comes to people that are coming out of the woodwork wanting to buy a house.
Mm-hmm.
So if you remember, Amber, about 2.5 months ago, actually about 6 months ago, we were telling people it's a juicy, crunchy time. Now's the time to get all these great deals. You're not going to want to miss it. Da, 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 da. Fast forward, 6 months later, we were freaking right. We're always right. Come on.
I know we were way right.
You almost said a bad word. I saw it. But we were super right, which I love saying that. I don't like saying it to boast, but I love saying that because I know that we're giving guidance the right way to the people who are following us and trusting us.
Mm-hmm.
So with that being said, we are now, as we said 2-3 months ago, about March, April, May is when things are going to start to shift. And that is exactly what's happening on my side of the business. So your side of the business is focused on the rates going up and down, and God bless you. I don't know how you live on a day-to-day basis. Our side is seeing a lot more people hit the market to buy homes, and a lot more people, and definitely seeing more people list their houses, but the faster the houses are selling, the new listings are being eaten up. So it's almost a wash. So let me show you what I'm talking about.
Okay, that's good.
So if we look at last month right here, this is a housing snapshot that shows you kind of the number of units sold versus the new listings versus the median price and things like that. So if we're looking just the top line right there, 2361 units sold, that's single family units. I'm just focused on that top section. New listings was 2,500. It was almost a wash, almost a freaking wash month over month. So it's not like we really had much to, much to really get excited about, because what came online was eaten right away. The
Yeah.
median price was 425, and then again 260 for the condos, right? Now, if I go to the next slide, I want to show you once again the number of closings was 2361. That's 37% more than the prior month. 37% up in closings from March to February, February to March, right? 37%. However, the 425 median closing price was 0% change month over month. So what that tells me is a lot of people are starting to hit the market. Sellers haven't caught on to that yet. So they're listing their home as they should for the right prices and things like that. And they're getting them sold and being done with it and calling it a day. As we start to see more and more houses hit the market, but also usually it's less, takes longer to list homes than it does to bring somebody out to buy, right? So it's always a trailing experience when you have new homes coming to the market and more people than we can manage coming to the market to buy at the same time. So that's why that was a huge wash. I think we're still going to have super low inventory, and we're going to start to see ourselves in a position to where all those great, juicy, crunchy, awesome deals that we've been seeing over the last couple of months are going to dry up very quickly. And we're going to start seeing people have to outbid each other again a little bit, not crazy, but a little bit. And it's just going to get a little bit hairier. Just to give you a snapshot right this second, I'm going to look right now.
Yeah.
At this very moment, we have 5,738 listings, condos, townhomes, and residential, single family homes right now. 5,178. That's not much more than last month. And I'm going to guarantee you we see even more buyers, and we're going to see an uptick in closings. So with the low inventory, what we're starting to see as literally as of 30 minutes ago, my business partner was out showing a house to one of our clients because I was going to be on here with you. And he called me and said, "Oh my God, the market's shifting. I can feel it." I was like, "Yeah, no duh. We've known this." But he said, "No, I really feel it." He said, we went to put an offer on this house. We just saw it 30 minutes ago, called the agent to find out what the deal is. They said they have 9 offers. They're only accepting above list cash. Now, this is one house and it's mid 400s, right? Which is like right in that sweet spot of where the median home price is. But if that doesn't tell you something, we haven't seen 9 offers only over list cash only in a year, or almost a year, right?
Yeah. So what I think people are doing is the rates are the rates, right?
Yep.
Like at one point last year, they were holding off saying, "Ooh, no, 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 no."
Right.
Right now it is what it is. This is the new norm right now.
Yep.
Like what we're dealing with in rates, this is the new norm. So they're just out. And honestly, when people that have houses right now don't want to sell because they have a 2 or 3% rate, we're
Right.
always going to have a lack of inventory. So
Right.
our market looks like we've bottomed out and we're heading
Yep.
the other direction right now.
And the
So
other thing that I think is happening, and I don't know how this affects your world, so forgive me for not knowing, but assumable loans has become a big topic of conversation because so many people were smart and bought 2 years ago, 3 years ago, and got these stupid low, ridiculous free money loans. Now there's a big discussion on the real estate side for the realtors about how can we talk to our clients who are buyers about assuming someone's loan so that they can actually still buy the house, but assume their loan and get that awesome screaming deal, qualify for a little bit more. So again, I don't know how that affects your world or how common it is, but that's a new conversation that I'm hearing happen over the last few months.
Yeah, I have the conversation happen a lot. Do you want me to explain a little bit
Please,
about
please
that?
do. Yep.
So when you're assuming a loan, you're taking over the other, like, so a buyer bought a house for, let's say, 300,000 and they
Right.
did a loan for 300,000 on an FHA or VA loan because conventionals are not assumable. So
Okay.
they bought that house at 300,000, they did the loan at 300,000. So now, but the rate was only like, let's just throw out 3%. So
Right.
with the rates being more than double that right now, you're
Right.
kind of like, well, that would be great to get that 3% rate. That's done through an assumption department. So that's a different loan. So they take longer. So keep in mind your seller would have to be willing to wait months to be able to get the assumption complete
Got
on
it.
it. So that's the thing to look for on that. And then also when they're selling their house for doing an assumption, you can only take over the loan that's on the house. So if they sell it for a higher amount, which Of course they're going to,
Yeah,
right?
they're gonna want more money. They're gonna wanna make sure they level up that, so if they bought it for 300, it's now worth 425, you're
Uh-huh.
gonna be buying what the difference is, right?
So you're going to either be paying cash for that difference, or you would have to be able to take out another loan, like a secondary loan,
Got
like
it.
for the difference. So just keep in mind there's a little bit more to look at that than, hey, I get to take over somebody's 3% interest rate.
Right. And talk to me a little bit about the timing just for those assumable loans. Okay, are they anywhere from 30 days to 60 days to 90 days? How do they range?
The last time I called the assumption department, they were about 4 months. So
Wow.
it depends on, so remember, because it's not like me doing the loan. So you're
Sure.
taking over the loan for something that's already in the servicing department. So
Right.
whoever has that current loan, whether it's Guild Mortgage, US Bank,
Mhm.
Chase, whatever it is, whoever has that current loan, then you're dealing with their assumption department and their time frame. So it's going to differ depending on the bank.
Awesome. So that's something that we can talk a little bit more about in a different program, because I definitely want to have a little bit more experience with it. We've done a one or two, but they were so weird and convoluted that I didn't really feel like I got a full education. So if that's something, just as a seller, that I have an offer that comes in from somebody who wants to assume my loan, there better be a hefty price above what I'm asking for me to even consider it. Because with more buyers on the market, as a seller, I want to get in and out of this loan as
Yeah,
fast as I can, right? So there's got to be a sweetened deal on the other side of it in a big, big way. So you better really want that house. You better not be asking for anything special as far as repairs go. And there better be a very solid deal in place with that seller in order for them to be able to take that. Because that's a big risk for them to take their house off the market for 4 months, especially in such a volatile experience that we're having right now.
exactly. Yeah,
Love
exactly.
it. Well, let's do what we were meant to talk about. Just a quick reminder, anybody that's tuning in, please rewind and watch from the beginning. We gave a little bit of a scoop on what's going on right now in the market. More so than ever, though, drop it like it's hot. Give us your comments in the comment box. We're going to answer your questions in a few minutes. I'm here with one of the top 200 lenders in all of the nation, Miss Amber Coleman from Guild Mortgage. She is my favorite for a lot of reasons, but that one I just love saying out loud. Top
I
200
know,
in
thank you.
the top 200 in the nation. I'm sorry, but this is a big nation, and there's a lot of people who do what you do. So you better be able to do it well if you are going to get into that upper echelon. Okay, so let's talk about what we came here to talk about, Amber, and that is zero money down programs. Let's freaking jump right into it, because for me, this is the stuff that gets me excited when there's sort of a change in the wind. Like,
Mhm.
they do this, and like I always do the Mary Poppins where she's like, checking the wind. But at the end of the day, if there's a change in the wind and you see people starting to get nervous again about, I'm never going to be able to buy a house now, great. Now the sweet, crunchy time is over and I won't get those great deals or rate buy downs. These are the programs that make me super excited.
Yeah, and don't get discouraged, because every time there's a change in programs, and there's always a different way to make it work. So,
Yes.
yes,
Yes.
don't get discouraged. But so the first zero down program we want to talk about is the FHA zero down program.
Let's talk about it.
Yes, because it's kind of a newer thing right now. So FHA is typically 3.5% down, but there's an FHA zero down grant program where you're adding basically a second mortgage onto the grant or
Mhm.
onto the loan to be able to cover that 3.5% down. Did that make
Awesome.
sense what I just said there?
Absolutely. Yeah.
Okay. So basically the amount of money that's coming in the grant is going to be 36 months forgivable loan. So once you have the loan for 36 months, the 3.5% that you got for the grant, it gets forgiven. Beautiful, right?
Oh my God. Yes.
So it sounds like a lot of the other grants, but here's the difference on it. You can go down to a 620 FICO score on this program.
Wow.
620. Most of them require 640 or 660. This one is a 620. So it's opened up a lot more avenues for a lot more people, right?
Oh my
And
God.
then the debt ratio is 45%, which is typical for a grant program.
Okay.
The other cool thing about this, I was just running the income limits, and the income limits for the median income is 110,295. So it gives a lot more
What?
availability to a lot more people. I know, I was excited too when I saw
That's
that. I just pulled
that's
that
one
this
of
morning.
I'm genuinely surprised, because that's one of the first grant programs that I've seen offer free money or that type of money, that forgivable loan to someone above 100,000, even above 80, honestly. That's
Yeah.
amazing.
Yeah, and it's not like some of them are limited to how many people are within the house.
Right.
Some of them there's different limitations on it. This one doesn't. So this is a different way to be able to, if you're going to have to come in with closing costs, then we can kind of use this grant. Like we could structure it different ways to be able
Wow.
to make things work.
That's
on there.
amazing.
Kind of
First of
cool,
all,
huh?
that one's freaking awesome. All right,
I
give
know,
me
you
another
love
one.
it?
Give it to
Okay.
me. Give me the
So
one,
the
two punch.
next one that we don't talk about a whole lot, but it is a really cool program. This is if you're going to buy in rural areas. So there's two that are for rural areas. The first one's called USDA. I know we have one right now, Laci, that's
Yep,
USDA,
we sure do.
so this one is 100% financing for rural areas. So like when you're looking in Las Vegas, it's like the outskirts of Las Vegas. Like, as you get close to Indian Springs or like Pahrump, or even there's areas in like Boulder City. So basically like the outskirts of Las Vegas that fit
Does
into
this is
it.
this the one that applies to Southwest Las Vegas in some areas as well?
No, that's the next one I'm going to talk
Okay,
about.
okay.
This one's the
So this is like Boulder City, Pahrump, Indian Springs, like Mesquite, even possibly like all around Las
yeah,
Vegas, not
yeah,
necessarily
yeah,
in.
yeah.
By the way, just a side note, those aren't far away from the middle of Las Vegas anymore. They used to feel like it, but I'm going to tell you right now, you can get to the center of town where all the action is from Pahrump in about an hour, but from Indian Springs, what, 40 minutes? Like it's in Boulder
Yeah.
City, 30 minutes, right? So it's really not that far.
Yeah, it's not that far. So this one, I mean, honestly, the rates on USDA are really good. So
Awesome.
when you're comparing USDA to like FHA, the rates are very comparable. Mortgage insurance is lower than
Right.
FHA. It's 100% financing, so you're not coming in with any money down. The biggest caveat to the USDA is you have to fit under a 41% debt to income ratio, and
Got it.
they're very, very strict about their debt to income ratios. So like, we got to make sure that you're buying a house that's, you're leaving a lot of room for expenses
It's
on the
yeah, so
USDA.
you don't have a ton of credit card debt, you don't have a really expensive car payment, like, and that's something I wanna just tie into with why you're so amazing, Amber, and your team is so great is you guys take the time to sit down and actually work through a plan with someone. So if let's say I came in and I want this amazing loan, this is it. I don't wanna live in the middle of the city, I wanna live in Pahrump. This would never be me because I love the city so much, but whatever, right? We see so many people kind of really enjoying the best of both worlds with this. You guys, and I come in and I say, oh gosh, I'm just at 46% debt to income. You're not going to be like, okay, well, sorry, see ya. You'll say,
Oh
great,
no, we're
let's
gonna
talk about
figure
it.
out
Let's put a
a
plan
plan.
together. Let's figure it
Yeah.
out. So for me, I'm just really, really excited to hear that, like, that it's 41% debt to income, that you guys, I know you'll work a deal and a plan out, and that it's like 100% finance. Just blows my mind. Blows my mind.
Yeah. So this one also has income limits, and this is based off your household. So
Okay.
depending on how big your household, you can go to higher incomes, or how little your household would be lower incomes,
Got
right?
it.
But I mean, very cool program. I get excited anytime I get to do a USDA
Girl,
because
I'm
just
excited
the
about the one we're
terms
working
of
right
it.
now. We're just
I
trying to
know. I'm sorry, I don't mean to keep cutting you off, but just the terms of it are they're exciting. Like when you can
yeah.
do a USDA loan because you're buying in one of those rural areas, it's really fun.
Well, and it just shows uh, how much the city's expanding because we're seeing more and more people ask about that loan for that reason. That loan and the next one. So give me the next one. What do you got?
So the next one is this is called the Home at Last. So it's just for rural areas. So you could do them in those places like Pahrump and Indian Springs, but the cool area is the southwest side of towns, like by like Southern Highlands and Rhodes
Mhm.
Ranch, which is
The area that they're about to open a brand new locals casino with all some really awesome, amazing new restaurants and entertainment and hotel and pool and spa in the works. Yeah. Oh, you mean that area of town?
yeah, that area.
Yeah, that area. Yeah.
So
This is nuts to me that this works for that area. Really
I
crazy.
know. I wonder how long it's going to work because that area is actually really cool. And I mean, honestly, I was in that area just a few weeks ago, and I drove to the strip from that
Yeah.
area, and it took me like 15 minutes. So I'm
I'm
like, this
pretty
is.
sure you came to the strip to meet me if I'm not
I
mistaken.
did, yeah. That
Yeah.
was at Mandalay Bay. It was super fast because it's
Yeah,
direct connect off 215 to I-15. But
absolutely.
anyway, so the program, this one is cool because it allows you to go to higher income levels. So you can go to $150,000 income to be
What?
able to qualify for this one. Yeah. This program actually has a lot of different ones. So there's programs that have that 150,000, and there's other programs that have difference in what they give for incentives, like for grants that
Mhm.
are more based off of like what your household income is.
Oh my
But
God.
the one you could do, they kind of cut this one off for a while, but I just talked to them. I think it was earlier this week, or maybe it was last week. Just to make sure I was looking at their website right, and they just opened it back up where you can get you can get like the grant money with that $150,000 income again. So pretty cool.
Can we look
That
at
one
this one for
requires
me? Can we look at this one for me, Amber, like immediately?
Oh yeah, you would like the southwest side of town,
I
huh?
know. Well, it's foodie paradise. I would definitely gain 30 pounds, but you guys love me anyway, right? A little fluffy lacy. Nothing wrong with that.
We love you no matter
I
what,
love
right?
that. I love that. Is that all the programs we were going to share today, or is there something else?
I mean, well, there's the, VA. Do you want me to go over the VA
Talk about
too?
VA.
Because we
Yeah.
love our veterans, right?
Yes, we do. Thank you
So
for your service.
yes. So the VA loan is pretty cool in that, I mean, if you're a veteran or you like, so I talk to veterans all the time that were served years and years and years ago, have never used it.
Yeah.
And so there's no better loan out there than
Yeah.
VA.
Yeah. And
100%
rightfully so.
financing.
Rightfully so.
Yes. No, 100% financing, no mortgage insurance. There's a VA funding fee on it, but
Yeah.
that VA funding fee is forgiven if you have any disability with on you. Their guidelines are a lot more lenient than other guidelines that are out there. They just like VA loves their veterans. So like sometimes even if there's something weird and we call VA, if there's a way around it, they'll let us know it. So it's one of
Absolutely.
the coolest programs that are out there, thankfully, and
Yeah.
rightfully so for our veterans.
I love it. Girl, you made me so happy. I just want to do
Are
like
you
the happy
excited?
free money dance right now. I love it. First of all, there's a couple of those I want to look at for myself as I look to buy again. And I'm just really excited about the fact that, even though we're sharing, and we're not sharing grim news, we're just sharing honest news as we do every single week for you, every single week. We're sharing news about the ever evolving craziness of the world that we both decided to get into, real estate and lending. Whose idea was this, Amber, for us to get into such a wacky ass world for our jobs? I don't know. It wasn't my
Well,
idea.
our brains are kind of wacky, so it kind of fits us, right?
I definitely agree with you on that. So, with that being said, it's time for you guys to ask us anything. Of course, we're always here for you. I'm just really excited about the fact that we're able to share good news when we're sharing sort of wonky up and down news about the market. We know that things are going to evolve. We know that we're going to see some stuff and some movement as we get closer and closer to that Fed meeting, which is super exciting. But at the end of the day, it's also a little scary, right? So we want to make sure if you've been sitting on the sidelines, now is not the time to do that. Now is the time to strike while the iron is still somewhat warm, and let us try to get out there and get you a screaming deal. We didn't talk about new homes. So before we jump into questions, I wanted to just talk a little bit about the new homes that we're seeing and the shifts that we're seeing in that area. All along, this has been a lot of resale discussion, but I know both you and I, Amber, do a lot of new home sales. You do a lot of lending for new homes, and I do. Obviously, we're experts in the new home realm. We've been visiting new home communities throughout the last few weeks, just trying to make sure that our contacts know us and we have conversations. And almost every single one of them, and some of them surprised me because of the location, almost every single one of them has said that they are pulling back a lot of their incentives and they're not going to be giving as much as they were over the last few months. So just a quick reminder, the juicy, crunchy granola bar that we've been talking about for 6-7 months was absolutely accurate, and the timing of the market shift has been absolutely accurate. So if you needed proof in the pudding, please go back and watch some of our live streams of the last year and look at the timing of how things have changed, and just know that you're listening to and watching and absorbing good content from good people who tell the truth at all times. What do you think, Amber? High five on that one.
Oh, definite high five. That's a big high five right there.
Okay. Well, let's jump in here. Okay. DLVTT says hello. Max Factor says drop it like it's hot. Johnson Rice said, so I'd like to hear Amber's thoughts about this May 1st thing from Biden that has me furious. What's this May 1st thing from Biden? Do you know, Amber?
Give me some more information. I don't know what the May 1st thing from Biden is.
Oh, here we go. It just came up. They're making it so that people with high credit scores get punished on home loans to subsidize risky loans. Oh, have you heard about that? I haven't heard about that.
I'm going to do some research tonight on that because yes, that definitely, I honestly have not heard about that. So I'm going to do some research tonight, and you know what? That might be something good for us to talk about.
I think so too. So here's the deal, Johnson. Stay tuned. We're going to do our next live stream and talk a lot about that. So stay tuned. We'll make sure we label it appropriately. Make sure you're subscribed to all of the channels so that you can be notified. But let's do some more research. And I think just to be very open, I purposely try not to watch a lot of politics news because it just kind of weighs me down and gets me sad. I know you, Amber, have kind of expressed the same. We know a lot of it ties to what we deal with, but most of it takes a lot longer to affect housing than the day-to-day rages that go on across the news. So definitely let's look into it and we'll talk about it. That's awesome. Ryan Valtierra says, hello, everybody. Hey, Ryan. Nailed It by Nicole says, hey, everyone. Hey, Nailed It by Nicole. Okay. The LVTT says, a little off topic when we talk about loans, but What should a foreigner pay attention to in relation to a down payment on a house? Great question. Really good question.
That's an awesome question. So when you're it depends on whether you have a credit score, like if you have a social, so you have credit in the United States or not. If you're living in another country, you don't have any credit in the United States, then it would be like considered a foreign national, and your down payment on that would be between like 25 and 35% down.
That's
Dep-
awesome. Well, let
Depending
me
on
let
the
me
type of
let me
loan
ask the
you're into.
follow up here for you, because he says, hey, here I'm thinking, is it best to pay full price right away, or would it be better with a 50 to 75% payment down payment? What effect will it have on the credit rating? Great question. Great question.
So is this the same? Is this the
Same
same
question. It was like a two-parter.
Okay. Well, I mean, let me just see really fast. So
The credit rating is actually boosts your credit rating if you are able to get a loan, right? Loans are
yeah,
going to help add to your credit, if I'm not
but
mistaken.
if you don't have a social,
Yeah,
so if you're from another country and you don't have a social here yet, there's not going to be anything that reports to the credit because there's no social. So
got
it
it.
depends on if you have a social, then we can attach that to your social security, and then that will be good for your credit to be able to have it, but it depends on how your status in the United States is.
Good point. I love these questions. All right. Martha G says, hey there, ladies. We were hoping to have sellers possibly covering our closing costs, but now listening to the market updates makes me think we should just wait and save more money. Martha, here's the good news. Great question. So glad you're listening and tuning in. I'm sorry if it took us too long to answer your question, but here we go. I'm going to give you the scoop. I think if you're ready to buy right now, it's worth at least giving it a shot. It's worth sticking our neck out there because all those incentives are not gone. And there are still some builders doing them. They're few and far between, but we know which ones and we can go and dig. They change on a daily basis. But if you're ready to think by now, start working with us right now. Let us look at what we can find you. If we start looking and it's like a month or two of, nothing worked out, they're not giving what we want to get what you need, then we pause the process. It doesn't hurt your credit. It doesn't hurt us. It doesn't hurt anybody to stick your neck out there and start looking, especially while there's still some of these awesome crunchy deals that are still sitting out there. Not all of the agents in the city are as educated as me, and not all the lenders are as educated as Amber. So there are still lenders and agents giving that are representing sellers, agents specifically representing sellers, who are still giving what they may not have to give anymore, if that makes sense. And we're also negotiation bulldogs. So why don't you stick your neck out with us, Martha? Don't do it alone. Do it with our team. We've had success. We're just starting to see the shift, just like we promised you a few months ago. And while we're starting to see it, you're watching at a perfect time. We may still be able to get you what you need. So basically, if you don't call us, I'm going to be really upset. If you've already called us, hello, it's nice to see you again. I don't know. I can never tell whose name is what on this thing. Great question. What do you think, Amber?
One more thing to add to that too. So when with builder loans, like with builder deals, they're buying, all the builders in town, or a lot of the builders in town have bought what's called a forward commitment. So they paid a big bulk of money to a lending company to buy a certain rate, and they did it with it like $5 million or $10 million, depending on the size of the builder, right? So even though they might not be giving incentives in the future, they still have to use up all that money. So you still have money that might be able to be used on those forward commitments. So right now is probably the best time. I think that's what we were trying to like relay, and they're starting to go away. But just like Laci said, they haven't all
Not
gone away.
gone.
And sometimes you can find that seller too that's just like, I got to sell fast, I'll take the first offer, right?
Oh
Whatever
man,
it
I'm
is.
telling you, you never know. You never know. And I don't want to say this lightly, but we've seen a lot of divorce listings. I don't know if COVID kind of put people through the ringer. We've seen a lot of listings where people have to move out of state. They're moving out of the country. There's a lot of different motivations for people who are listing their homes. So this is the start, but this is not the finish. So call us, please, Martha. Call us. Let's talk. Let's talk soon.
Don't give up. Don't give up. You
Don't
got
give
this,
up.
girl.
Tish says, hey, ladies, you guys are amazing. Thank you for the great information. Sammy Bowen says, hello, beautiful ladies. And then in a second message says, thanks for the info this morning, Laci. You're the best. Sammy, girl, I love you so much. So it's so crazy. Sammy's our loyal follower. She's become a friend. And I thought of her. I was brushing my teeth this morning and I went, I need to reach out to Sammy because she's got some major life stuff happening that is going to probably get her closer to buying a home much sooner than we thought, Amber. It's happening for Miss Sammy. Just want to say, hello, Sammy. We love you. Congratulations. And I'm happy to help. Happy to help.
Oh, love you, Sammy. Hey, plus I love it how the best ideas come to Laci's mind when she's brushing her teeth. I don't
And then, anyway, she texted me after I was done brushing my teeth and I was like, I'm psychic. I knew it.
Oh, you are psychic.
Greg Smith wants to say that it's all over Fox News, Fox Business this morning. So as you can see, we've been preparing to go live for you this morning, and we're not tuned into the news. So we will do some more research on the Biden information that was shared today. It may have a negative effect or a positive. We're going to be very honest, as we always are with you guys. So stay tuned. We'll do it. We'll do a special live stream if we need to in the next few days. So we'll talk. We'll figure it out. Stay tuned. Stay tuned. All right. We're going to do it. We're going to have a good time. Nobody's going to get upset. Everybody's going to be happy, or we're going to try at least. So good point. Let's see. Speaking of the VA loan, Amber and Brett could end up being part of a wedding in a couple of weeks. Thanks again, ladies, for your work on these streams. In 10 days, we will be coming in hot. Greg.
Yay,
Amazing. We got another note here from Raphael Jones that says, Laci, I look forward to working with you. Ray, can't wait to meet you. My business partner, my team, all of us are super excited. We want to wrap our arms around you and get you to Las Vegas sooner rather than later. And Sammy, of course, confirms I am psychic. Spidey senses were tingling as I was brushing my teeth. It's not because I have an electric toothbrush. That's not why, I promise. So, Amber, I think it's important for us to wrap up before we go dark on you guys. We will be doing a follow-up to some of the questions in this live stream today about the new Biden announcement. I'm going to hang out. As soon as we hang this up, we have to go online and look immediately. This is what we get when we try to be prepared. We're online. We're not looking at the TV.
And we'll let you know if it pisses us off too, but we'll also let you know the ins on it too.
Yeah, so let us do a little research. We'll do a special one if we need to. Also, we have an upcoming dinner with Laci and Amber. Come and eat with us experience. We're putting together the final pieces of the puzzle. We're going to go to somewhere really special, and we're going to do a full-blown Q&A, ask us anything, while we enjoy a beautiful restaurant here in Vegas that we share our experience with you. I hate doing mukbang type eating in front of the camera. I don't like watching myself eat. I don't know why you guys like it, but we have had an abundance of requests for this. So Amber, I'm going to figure out a way to cover my mouth while I'm chewing, and we'll figure this out together.
Plus Laci always tries to get me to try like crazy stuff.
I do. So remember that time they tried to get me they voted for me to eat barbecue ribs, and I was like, yeah, that makes
TV with all of your teeth.
Chomp on it. That's perfect. Yeah, I'm not doing any kind of that BS. Okay, it's gonna be a nice, lovely dinner, and we're gonna enjoy it, and you guys are gonna join us. So stay tuned for the announcement on that. It'll likely be sometime next week. In the meantime, we may or may not be doing a kind of a last minute hoorah one for you to talk more about this information that we learned about today. And Johnson is just saying, if anybody else wants to do research, this guy's giving us their email. This is the one I meant to click on. Here's the headline to look for: how the U.S. is subsidizing high-risk home buyers at the cost of those with good credit. So we definitely want to look into this. We don't want anybody with good credit to be punished. I'll start a picket line outside if we need to, guys, but let us do our research first. And we've got people asking for more information about zero money. So thank you for putting your email in the comments. I highly recommend you take it out of there, but we appreciate you being so forthcoming. And everybody be nice. Don't send any spam. We love you. Amber, thank you for joining me. Top 200 in the nation.
Oh, gosh.
My sweet friend Amber, thank you for joining us.
Thank you for having me. I always love coming on your channel.
She brings her big brain and I bring my big mouth. It works out really, really well.
And your big brain.
And my big mouth. Okay, bye guys. We'll see you next time.
Bye guys.